So we've had the election, we have a clear outcome, and while it's going to take obviously a little time to get Brexit done, we can look forward to a return to a kind of business as usual, BAU, in relation to tax and financial planning. Now, we're promised a budget which we will have probably by the end of February if the Chancellor gives the OBR the traditional 10 weeks of notice. So we're probably looking to the end of February for a budget, and at that time we can reference quite strongly the Conservative manifesto to anticipate what might be in the budget. Now, of course, there might be a little more, you'd expect a little more, especially in relation to the detail, but the manifesto gives us a good indication of what to expect. With income tax, VAT and national insurance, we have the now relatively well-known triple lock, so no increases to those rates during the term of this Parliament, this government, while they're in office. Then we've got capital gains tax with nothing really rigorous stated, except we do have a promised review of entrepreneurs' relief. On inheritance tax, there was absolutely nothing said in the Conservative manifesto, but as I've indicated in past videos, it's quite likely that the Chancellor and the Treasury will stand and look at the Office of Tax Simplification recommendations on inheritance tax. So we should review those quite carefully, because that may well be something that's in the next budget. A little more detail on that. Corporation tax, we knew ahead of the publication of the manifestos at the CBI meeting, it was stated that the Conservatives wouldn't be going with the 17% reduction promised in legislation for next year. We'd be sticking with 19%. But the corporate environment still then represents a very attractive one for the retention of funds, and so advising companies and corporate structures and money held by companies will remain a very important area for financial planners. And of course, in relation to SME owners who run their businesses through companies, there should be no let up in that respect, although of course we do have the IR35 issues to consider. Then we've got pensions. We have a promised early review, so-called within the first 30 days of government was what was said before the election, a review of the taper issues in relation to pension contributions for doctors, although one finds it hard to see how you can confine any kind of relief or relaxation to just doctors. It extends to a much wider class, so we'll have to watch to see what happens there. So we have the budget coming on, and we'll be looking to the end of February, but let's not also forget, let's not get carried away with just focusing on the budget, because we are entering in that annual period where we're moving towards the end of yet another tax year. So a great time to re-engage with your clients with this new relative certainty to look at year-end tax planning. Of course, we have great coverage on this and will continue to have it on TechLink.